This is America, and this is the Federal Reserve, which has been the scene of quite a tug of war between the president and the old chairman of the Fed board over interest rate cuts. In a minute, I'll have more on the new chairman's position on monetary independence. First, though, let's go to our Washington, D.C. studio and Rob Matheson.
Thanks, Richard. Now, Kevin Warsh was sworn in as chairman of the Federal Reserve last week. That means he's stepping into a maelstrom of mounting uncertainty over inflation, geopolitical conflicts, and volatile financial markets. He's also facing rising political pressure on the central bank's independence. President Donald Trump is a big fan. He'd like the Fed under Warsh to lower interest rates. That, Trump says, would boost the economy. But that's something Warsh's predecessor, Jerome Powell, was determined not to do under political pressure. And that led to very public disagreements. So now Kevin Warsh is walking a very fine line. Richard Gaisford has more.
The president's never made a secret of wanting lower interest rates.
We're paying far too much interest in the Fed. The Fed rate's too high, unacceptably high. We should have the lowest.
But the reality doesn't always match the expectations. A war with Iran and restrictions on the supply of oil, gas and goods has pushed up prices and inflation, making cuts all but impossible.
Developments in the Middle East are contributing to a high level of uncertainty about the economic outlook, and we will remain attentive to risks to both sides of our dual mandate.
That was Jerome Powell's last interest rate announcement as chair of the Federal Reserve.
I won't see you next time.
Where he's fought to keep monetary policy out of the hands of the president. That's led to friction since Donald Trump came back into office, and not just over interest rates.
The 2.7 is now 3.1.
I'm not aware of that.
Yeah, it just came out.
Yeah, I haven't heard that from anybody at the Fed.
The $2.5 billion cost of renovations to the Federal Reserve headquarters in Washington has become a flashpoint in that battle for independence, the subject of a Department of Justice investigation.
He's under investigation because he's building a building for hundreds of billions of dollars more than it's supposed to cost.
The Fed chairman stood his ground.
The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president.
The investigation continuing as a new chair takes over.
So let me ask you another question.
Out of monetary policy.
In our meeting, you said you would be independent.
With Kevin Warsh keen to play down suggestions that he'll be more compliant to the president's wishes, despite being Donald Trump's choice.
The president never once asked me to commit to any particular interest rate decision, period, and nor would I ever agree to do so if he had, but he never did. I was honored he nominated me. Like everyone else in the committee in the world, I've heard his view on interest rates. It sounded very similar to me to every other president in economic history that I've studied.
Well, the next Fed committee meeting is in the middle of next month, and that will be Kevin Warsh's first interest rates announcement. He is one of 12 voices on the board making the decision, and many analysts feel the committee is really going to have to put up interest rates to curb this rising inflation. The president, well, he's been quite quiet of late about his desire for interest rate cuts. He, like many other Americans, fully realizing that military action in the Middle East is a factor in pushing up prices. Richard Gaisford, Al Jazeera, Washington.
So what does the Federal Reserve actually do? Well, it works to ensure a healthy and stable American economy. It does this in 5 different ways. It's conducting monetary policy, regulating financial institutions, promoting financial system stability, operating the payment and settlement system, and protecting consumers. And that is all guided by the Fed's Board of Governors. It's made up of 7 members, and they serve a staggered 14-year term. They're nominated by the president, they're confirmed by the Senate, and they also supervise and set policy for the 12 reserve banks around the country. They monitor the economic health of each region. Now, the actions taken by the Board of Governors might seem like high fiscal policy, distant from the daily lives of Americans, but it is anything but. Heidi Jo Castro explains how the actions taken by the Fed impact the decisions being made inside people's homes.
Interest rates are a kitchen table issue for Americans. 60% of American homeowners pay a monthly home loan or mortgage. How much they pay depends on what the Federal Reserve sets as the country's benchmark interest at the moment that they take out the loan. The higher the federal interest rate, the higher the mortgage rate, the higher the house payments that the family commits to. Say they're borrowing $350,000. That's the average new mortgage in the U.S. If the mortgage rate jumps from 4% to 5%, the family will pay an additional $200 a month, which over the course of a traditional 30-year loan mortgage comes out to almost $75,000 extra in interest payments alone. That extra cost of borrowing is a major reason why the proportion of U.S. households that own homes has been in decline since 2020. Here's how one realtor put it.
We have folks that are not able to buy because their wages don't come in line with where that interest rate is. You also see sellers who need to sell their properties but can't.
They can't sell because there aren't enough buyers who are willing or able to pay the higher interest, and that slows the whole housing sector. The same holds true for small business owners. Jeff Harner wants to expand his distillery in Maryland, but he says that he won't be able to do everything that he wants if the interest rates for business loans, which are also tied to the Fed's decision, go up.
It could mean the difference between me being able to hire additional staff, me being able to make more investments in our business over the long term. Absolutely.
So higher federal interest rates means less economic activity for businesses, and that means job losses. And that is what the Fed wants to avoid. But lower interest rates means more people and businesses take out loans, which means more spending and more inflation. The Federal Reserve wants to avoid that too. This dual mandate of minimizing job losses while keeping inflation low is a delicate balancing act, one that impacts every American family at every kitchen table.
Well, we're joined now by Stan Veuger, a Senior Fellow in Economic Policy Studies at the American Enterprise Institute, and by Paolo von Schirach, the President of the Global Policy Institute. Gentlemen, thank you very much indeed for being with us on Al Jazeera. Stan, I'm going to start with you. Why is it necessary for the Federal Reserve to be independent?
So the basic idea is that a central bank that is independent, that is not subject to immediate control of the elected branches, will be more disciplined, that it'll be more willing to make hard choices in preserving price stability. In particular, the temptation that I think economists usually see is for governments to set interest rates too low, artificially low, to boost demand, to boost output, and to create an artificially booming economy, which then down the road will create inflationary pressure. The idea is by insulating the central bank a bit, that you're not subject to that immediate pressure to create additional demand. Okay. So that's the basic sort of economic idea behind it.
Right, Paolo. So we have this situation now with Kevin Warsh has been put in. He's obviously a favorite of President Trump. President Trump has high expectations that under Warsh, the Fed is going to drop the interest rates. Just talk us through how much power does the Fed chairman actually have, other than being the public face of the Fed?
Well, he's one voting member of the Open Market Committee, so he doesn't determine interest rates by himself. There are periodic meetings, and they meet and they discuss and they vote. Obviously, the position of the chairman has relevance because he leads the institution, but he does not predetermine outcomes. So that's something that has to be understood. Clearly, having a chairman who seems to be inclined, or at least this is what Mr. Trump would like, to be easy on interest rates, well, that can sway others or undecided voters within the committee and lead to that outcome. Right now, we can come to that later in a moment. It's not a good moment to cut interest rates because of the inflation, which shot up, particularly on account of high fuel prices because of the war that we all know about. So, whatever the expectations are for Mr. Warsh, I wouldn't say, oh, relax, interest rates go down to 1%, no, it's not going to happen.
Yeah, I want to talk to you about the kind of economic structure that could lead to those kind of decisions. But Stan, given that we have heard public statements from the chairman so far, is there anything that you're hearing from Kevin Warsh to suggest that he might be willing to give Donald Trump the low interest rates that he's looking for?
I certainly think that over the past few years, maybe even the past decade, he's been trying to curry favor with Donald Trump. I think the situation now is such that it's going to be very difficult for him to publicly support cutting rates, much more so even than a year ago. Inflationary pressures are much stronger. We're now getting close to 4% inflation. Inflation target is 2%. And so I think it'd be very difficult for him at this point to come out and have some story about how AI is accommodating a lot faster growth, and we shouldn't worry too much about inflationary pressures because we're going to have all these dramatic increases in productivity. And in addition, as Paolo said, he's only one vote on the Federal Open Market Committee. And so what he wants to avoid is blowing his credibility by coming out early in favor of a completely unreasonable rate cut, because even down the road, when such a rate cut may be debated but more plausible, I think at that point he wants to use his credibility to make the case. Right now, he's one of 12 members of the Federal Open Market Committee. It's not just the governors here in D.C. who sit on it, but a number of regional presidents do. And he needs to make his case if he wants to cut rates. And I think the worst thing he can do to that case is to come out too early in favor of a rate cut that doesn't make any sense.
Yeah, but Paolo, a lot of this is down to optics, of course, and how things look. And we've got to remember, Kevin Warsh was actually sworn inside the East Room of the White House rather than the Fed, which is normally the case. What kind of a message do you think that is sending?
He's my man. That's basically the message. The president says, okay, this is the kind of chairman I want, not the other guy who was not reliable and who, by the way, he named. Let's not forget, Powell was named and confirmed upon Mr. Trump's initiative way back. But then he was not fast enough to in cutting rates when Trump wanted. And so there was all this spat, which, by the way, included a criminal investigation. I mean, that's complicated, but which seemed to be really spurious. But just to try to either get him out, to resign, or force his hand. Yes.
I think it's worth, sorry to interrupt, Stan, I think it is worth at this stage just reminding ourselves what Kevin Warsh thinks about things. And this is in April, he was appearing before a Senate committee considering his nomination as Federal Reserve Chair, and he insisted he wasn't anybody's puppet.
I'm committed to ensuring that the conduct of monetary policy remains strictly independent, equally committed to work with the administration and Congress on non-monetary matters that are part of the Fed's remit, and I commit myself to accountability.
Stan, I want to pick up on the point that you were about to make there, but we should also remember that there is this issue of accountability, which I'm not entirely clear on, because who holds the chair particularly to account?
It's a complicated dance between, on the one hand, its desire to have an independent central bank, on the other hand, to preserve the democratic legitimacy of the institution. And so the Fed is organized based on legislation passed by Congress, signed by the president. The president nominates the governors, the Senate confirms them, Congress brings people in for hearings, and can, of course, if it wants to, change the Federal Reserve Act. And so that it really is you're trying to balance those two dimensions of independence on the one hand and democratic accountability on the other hand. And we'll see how that goes. I think clearly Trump is pushing too far in the direction of democratic control, so to speak, I think. But it's also not good to have an institution that's completely unaccountable, given how much power the Federal Reserve has. On that hearing, I think, I don't think Warsh did himself a ton of favors there in the sense that, not in the snippet we just saw, but more broadly in that hearing, he was unwilling to, for example, say that Joe Biden won the 2020 presidential election, which I don't think helps the case for his willingness to stand up to President Trump. On the other hand, he has a job now, right? So in some sense, Trump has lost most of his leverage over him because he has now been nominated and confirmed. And we've seen from the Powell case how difficult it is to fire a Federal Reserve chairman. And so that may shift his attitude in significant ways.
Yeah, Paolo, just sticking on the tone and the wording that we're hearing from Kevin Warsh, he is being pretty cautious. He is saying, I'm nobody's man. He is acting independently. But how closely should we be listening to the tone and the phrasing of the public statements that he is going to be making? Bearing in mind that my understanding is that one of his driving factors that he wanted to do was to change, in fact, limit the number of the federal officials' communications with the public when it came to speculation or regarding where they believed interest rates should be.
Well, look, it is a sport in Washington to try to divine what the chairman of the Fed really said. Greenspan was famous for saying almost nothing in a very elaborate, complicated, and mysterious way, whereby he was called the maestro, the man who is running this whole thing so smoothly. And then maestro, when the financial crisis hit, said, all the assumptions of my career have essentially been proven wrong regarding what drives, bubbles and what. In other words, it is a science, an art, a pastime in Washington to try to parse the statements of the chairman and say, well, what does he mean? Is he going to do the or no? Yes, now. But back to the point my colleague here is just making, independence is crucial. But people say, hey, there's no accountability. Who is ultimately the Fed answerable to? Well, the Congress, in a sense, but it's operating under congressional legislation, the dual mandates of keeping prices stable and ensuring or working towards full employment. It's been said a million times that these two objectives may be mutually exclusive in some circumstances. And if you add to this, as this new chairman takes office, the really, really horrible, I would say, circumstances of an enormous American public debt, this inflation that is going up on account of, I would say, self-inflicted wounds because of the how can I say, ripple effects of higher fuel prices, which is not just gasoline at the pump, but is the tomatoes at the supermarket. Who carries the tomatoes? They're carried on trucks. The trucks go on what? On diesel, and so on and so forth. Fuel price not available for airplanes pretty soon, not here in the United States, but so in other words, the circumstances of his office beginning right now are not the most, easy and auspicious to say, oh, no problem, we'll fix things and we'll get through. This is really difficult.
Yeah, it's not.
I think actually the moment we're in now, because there's uncertainty and there are impulses that push in both directions for the Fed with some concerns about the labor market, concerns about inflation. I think it's a good moment for Chairman Warsh to implement what you just referenced, his desire to have less explicit communication from the Federal Reserve. Because that really, the current approach of being super explicit about what do we think is going to happen, what are future interest rates going to look like, that really, it predates the Greenspan era. As Paolo pointed out, it really comes from the Great Recession, when interest rates were 0% basically, and the Federal Reserve didn't have conventional tools to further stimulate the economy. So the Federal Reserve at that point decided to start giving what they call forward guidance and be very explicit about what it was going to do in the future. It was going to keep rates low forever, but that was really only necessary because we were at the zero lower bound. We're not there anymore. Right now, the Fed is in a position where it can just lower or raise interest rates, and it should just do that, I think, instead of trying to project out what it's going to do in the next 15 meetings, because the risk is if you project out what you are going to do in the next 15 meetings, then you feel obliged to carry out that plan. And it makes it much harder to adjust to changing circumstances. And we know the circumstances are changing rapidly.
Yeah, there is sorry to interrupt, but I wanted to just bring up something that is interesting to me because it is unusual. Jerome Powell decided that he was going to stay on as a governor. Now, my understanding is that normally if you step down as chairman, you step down as governor. Powell gets to stay on. What are the implications of Jerome Powell? What do we read into the fact that he's prepared to stay on?
I just want to... I want to continue to be a voice, essentially, and he will be. But again, not with the same weight when he was chairman. Again, you're right. Tradition would say, I'm out, I'm done, I go away. No, he has the right, I guess, in terms of his mandate, to continue to sit there around the table and continue to be a voice, one of the voices around that table. Whether this is, for very good reasons or not, whether, in other words, whether in a practical sense this will make a huge difference or not, I don't know. It seems like he ran that committee, in a fairly good way. I don't think he was a contentious, how can I say, controversial chair of the Fed. He was only.
I think it's a bit more than just being a voice, though. I think it signals that he believes that there's a high probability that Trump will nominate someone, and Republican senators will confirm someone who's just not suited to be a Fed governor. And we've seen nominations in the past that I think were
that is true.
Were not strong. I think Steve Myron, who I've known for a long time, I think was not a good governor. He really put a lot of effort into backfilling a call for lower interest rates that was just inappropriate and I think relatively poorly defended. And I think Powell is concerned that if he steps down, Trump is going to nominate someone who's like he nominated Herman Cain in his first term. He nominated Steve Moore. He doesn't have a good record. And I think Republican senators are, if anything, more subject to his control now than they were during his first term. So I think Powell is worried that someone like that would get confirmed.
I want to talk about the political pressure element of this because of course, Jerome Powell was subject to litigation as a result of from Donald Trump saying that he had overspent in the terms of the rebuilding of the federal building. Let's just hear what he had to say about that. This is in January. The outgoing Federal Reserve Chair, as I say, Jerome Powell, had said that legal action directed against him was an attempt to intimidate him into doing Trump's bidding.
No one, certainly not the chair of the Federal Reserve, is above the law. But this unprecedented action should be seen in the broader context of the administration's threats and ongoing pressure. This is about whether the Fed will be able to continue to set interest rates based on evidence and economic conditions, or whether instead monetary policy will be directed by political pressure or intimidation.
Paolo, what do you think the chances are that in, I don't know, a few months' time, once we get past the midterms, once we head towards the main elections, that Kevin Warsh is going to be heading towards the door as well, or facing the same kind of litigation that he might get from President Trump?
Probably not, but I would call attention of the public that statement by a sitting Fed chair, it's unprecedented. I don't remember anybody said, hey, I'm being indicted on completely preposterous charges, basically of lying to Congress regarding projected expenditures, which admittedly are very high in the renovation, very profound. These are old buildings where the Fed is housed. So there was a lot of renovation, a lot of contracts, and apparently overspending. And he was accused of lying to Congress, in a really malevolent way, hiding these cost overruns. And this is really a totally spurious accusation. And the fact that he had to go on TV and to say this is political intimidation, honestly, please correct me if I'm wrong, I don't remember any previous chairman complaining with the White House that they were going to try to put him in jail for something.
Yeah, for sure.
Yeah.
So, though political pressure is not new, right?
That's not new, but not exerted under these circumstances.
Yeah, Stan, I want to come back to something that Paolo mentioned right at the top of the show, the circumstances under which the Fed might be encouraged to drop interest rates. Can you see any scenario in which that is possible, and certainly running over the next couple of years?
I don't think that's going to happen anytime soon. Inflation is now well above target. We're at close to 4%. The target is 2%. The Iran crisis doesn't seem to be getting solved, which is a driver. The budget deficit is enormous, 6-7%. Right in the Eurozone, the limit is 3%. To give viewers a sense of how large this is. We still have some of the impact of the tariff policies. And so there's just inflationary pressure from all sides. And I at the same time, the unemployment rate is still quite low. DC itself is a bit of an outlier here in the seat of the federal government, but in the rest of the country, we're still basically at maximum employment. And so there's really no reason to cut. If anything, I would expect the Fed to raise interest rates because we're so far above target. You may say a lot of that is supply side shocks that we should look through, but if you remain above target for long enough, people's expectations are going to change, and that in itself can create an inflationary cycle. The Fed, and I think if you want to criticize them for something, it should be this. They haven't hit their inflation target for 6 years now. Of course, the implication of that is that you would want them to raise interest rates instead of lowering them. But I think that's a valid line of criticism, and I don't think, and I think they realize that, and I don't think they will cut rates.
Yeah, Paolo, we've just got about 90 seconds left, so I just want to get an idea from you. What do you think success for Kevin Warsh would look like, given all the restrictions that he's facing at the moment?
Well, to be able to do essentially nothing with these keep interest rates as they are without political backlash, and particularly, sniping from the White House over some Republicans and say, hey, do your job. You were supposed to cut interest rates. But as it's just been said, in this scenario, with high inflation, and by the way, I expect higher inflation because the ripple effects of the higher oil prices have not yet, progressed throughout the entire economy in a stable fashion. If people are really, contractors say, it takes me 2 hours to go to a job, and just the gas alone is killing me. So he has to raise prices because otherwise he can't make a living. And on. Price of food, price of everything that includes plastics, all this is not yet fully reflected in the economic data yet. If the Iran crisis ends tomorrow, it would still take months before we adjust back to a non-inflationary environment because of lower oil prices.
Gentlemen, we're going to leave it there. Thank you to both our guests, Stan Veuger, Senior Fellow in Economic Policy Studies at the American Enterprise Institute, and Paolo von Schirach, the President of the Global Policy Institute. And that's all from the team here in Washington. Going to hand you back to Richard and Al Jazeera's global headquarters in Doha.
Thanks, Rob. On the next edition of This Is America, we'll be looking at how Donald Trump's communication style is shaping newsrooms both here in America and around the world. That is Thursday, 18:30 GMT, 2:30 p.m. Eastern Time here in the United States. For now, though, from Washington, it's goodbye.